Ever wondered how some people seem to turn a small fortune into a vast wealth? What's their secret? Well, the answer lies in the power of market trends. It's like a secret language spoken by the economy, and those who understand it well, they are the ones who make it big. Now, you might be wondering, what exactly are market trends? In the simplest terms, a market trend is the direction in which the market is moving. It could be going up, which we call a bullish trend, or going down, known as a bearish trend. And then there are times when the market moves sideways, neither up nor down, which we call a horizontal trend. But it's not just about knowing the direction, it's about understanding why the market is moving in a particular direction and how long it might continue to do so. It's about predicting the future, but not in the way a fortune teller does. It's about making educated guesses based on past and present data, analyzing various factors that influence the market, such as economic indicators, political events, and even psychological factors of investors. Understanding market trends is like having a compass in the financial wilderness. It gives you a sense of direction, showing you where opportunities lie and where risks lurk. It's like a guide helping you navigate through the complex world of investment. Now let's take a sneak peek into the journey of a successful investor. This investor, let's call him John, started with a small fortune. But instead of taking blind risks, John decided to study the market trends. He spent hours and days analyzing data, understanding the forces that drive the market. And guess what? John made it big. He turned his small fortune into a vast wealth, all thanks to his understanding of market trends. So let's dive into this world of investment and understand how one investor made it big through market trends. Because remember, the key to success in investment is not just about taking risks. It's about understanding the market. It's about speaking the secret language of the economy. Scene script. Meet John, an average guy with an above-average understanding of market trends. John's journey began in his early 20s with a modest savings account and a dream to make it grow. His first foray into the world of investment was humble, buying a few shares in a tech startup that caught his eye. It was a small win, but it was a win nonetheless. It fueled his interest and fortified his belief in the power of investment. His successes didn't come without setbacks, though. There were losses, sure, and they stung. But John was not deterred. He saw each setback as a learning experience, a stepping stone towards better understanding the ebb and flow of the market. John's real breakthrough came when he started to delve deeper into market trends. He began to understand that the market was not a random entity, but a beast that moved in predictable patterns. It was a revelation, a key that unlocked a whole new world of investment opportunities. With every investment decision, John looked at the market trends. He studied them, dissected them, and learned from them. He understood that trends were not just lines on a graph, but a reflection of real-world events. Political shifts, economic policies, technological advancements, all these factors shaped the market trends. And John learned to read them like a book. His understanding of market trends paid off. His investments started to yield substantial returns. His small savings account was now a hefty investment portfolio. His wins outnumbered his losses. Each success was a testament to his understanding of market trends and his calculated decisions. John's story is not one of overnight success. It's a story of perseverance, of learning from failures, and of making informed decisions. It's a story that underlines the importance of understanding market trends in making successful investments. John's success is no accident. It's a result of careful analysis, understanding market trends, and making calculated decisions. But how does one analyze these so-called market trends? What's the secret sauce? The art of analyzing market trends is a bit like putting together a complex jigsaw puzzle. You're searching for patterns, connections, and clues, all while trying to predict what the completed picture will look like. The first piece of our puzzle is economic indicators. These are the vital signs of the economy, like the pulse rate or blood pressure of a patient. They include things like employment rates, inflation, and gross domestic product. An uptick in employment rates, for instance, could signal a healthy economy, which might translate into increased consumer spending and positive trends in certain markets. Next up, we have industry trends. These are the shifts and developments within specific sectors that can influence market trends. Think about how the rise of e-commerce has impacted retail, or how the push towards renewable energy has affected the oil industry. By keeping an eye on these broader shifts, we can anticipate which way the wind is blowing in particular markets. Then there's company performance. This is where we zoom in from the macro to the micro. We look at a company's financial health, its competitive position, and its future prospects. A company that's outperforming its peers or making savvy strategic moves might be set to ride a positive market trend. But here's the thing, none of these factors exist in isolation. They're all pieces of the same puzzle. A booming economy might boost a struggling industry, or a standout company might thrive despite a downturn in its sector. It's about weaving together these different threads to get a holistic view of the market. And let's be clear, this isn't about looking into a crystal ball. It's about informed speculation, not certainty. It's about making educated guesses about the future based on the best information available today. Analyzing market trends isn't rocket science, but it does require a keen eye and an understanding of the bigger picture. Armed with the knowledge of market trends, how does one make the right investment decision? Now that's a question that has been on the minds of investors since time immemorial. The answer lies in a combination of risk assessment, diversification, and patience. Imagine the market as a vast ocean, teeming with opportunities. However, just like the ocean, it is also fraught with risks. This is where risk assessment comes into play. It's the compass that helps you navigate the stormy seas of the market. You need to gauge the potential downsides of an investment before you dive in. Ask yourself, what's the worst-case scenario, and are you prepared for it? Now let's talk about diversification. It's a golden rule of investing that helps to mitigate risks. Think of it as not putting all your eggs in one basket. If one investment doesn't pan out as expected, others in your portfolio might still yield positive returns. Diversification is about spreading your investments across different asset classes and sectors. It's about creating a balanced portfolio resilient to the ups and downs of the market. But even with the best risk assessment and diversification strategies, investment decisions require a hefty dose of patience. The market is a roller coaster ride with its highs and lows. It's easy to get swayed by the short-term fluctuations and make impulsive decisions. But remember, investing is a long-term game. Patience is key to weathering the market storms and reaping the rewards of your investments. So how do you make the right investment decision? By understanding the market trends, assessing the risks involved, diversifying your portfolio, and exercising patience. It's not just about chasing the latest, hottest trend. It's about careful analysis, strategic planning, and disciplined execution. Making the right investment decision isn't just about following the trends, it's about understanding them and making calculated risks. So, what can we learn from John's success story and our dive into market trends? Well, there's a lot to unpack, so let's get right into it. Our journey through the world of market trends has taught us that understanding these patterns is not just useful, it's crucial. It's like being able to read the wind before setting sail. It helps us navigate the choppy waters of the financial markets and steer our investments towards the shores of success. We've also discussed the art of making calculated investment decisions. It's not just about riding the wave of a trend, it's about understanding the currents beneath the surface, knowing when to dive in, when to stay put, and when to swim against the tide. Every decision should be well thought out, researched, and in line with your financial goals. John's story is a testament to this. His success didn't come from chasing every trend that came his way. No, it was a result of careful analysis, informed decisions, and strategic planning. Remember, investing isn't a sprint, it's a marathon. And that brings us to our next point, the role of patience and perseverance in investing. Remember how John didn't strike gold on his first try or even his second, but he didn't let that deter him. He persevered, learned from his mistakes, and kept his eyes on the prize. Patience, as they say, is a virtue. And in the world of investing, it can be a game changer. Think of investing as a chess game. Understanding market trends is like understanding your opponent's moves. Making calculated decisions is like planning your strategy. And patience and perseverance, they're like waiting for the right moment to make your move, even if it means sitting on your hands for a while. Remember, the market is a battlefield, and knowledge of trends is your most powerful weapon. Use it wisely, and you may just find yourself on the winning side.